Welcome to the Stockscores.com market minutes for January 9th, 2012. Let's get right into the charts. This week I'm going to not only look at the daily chart but also the intraday chart to show how they compare. Starting off is the chart of the S&P 500, and we can see that last week we broke the downward trend line, which has stood up for quite some time. And that is a positive signal for stocks, as it indicates that the market should go higher. The fact that the market is going to go higher doesn't mean it can't go lower first. In other words, we've had some pretty good gains since the middle of December on the Santa Claus rally, and it's possible that we could see a pullback before moving higher. To help us determine whether that is likely, it's helpful to look at the intraday chart. So what I'm showing now is the Stockscores chart for 30 days on a 30-minute interval. And here you can see that we have a pretty favorable pattern. We have rising bottoms towards a more or less flat top. Technicians will know that this is an ascending triangle pattern. If the market can break through that red line this week, we should make the next leg higher. If, however, the green line is violated, then we should be concerned that there is going to be a pullback before the daily chart is able to make that move higher. So I think that is most likely to happen, that the market will move higher. We just got to wait for that break of the red line, but we should be cautious if that green line is broken first, as prices will probably pull back. Moving on to the Toronto Stock Exchange, we see a similar situation where the downward trend line has been broken, and we've kind of been treading water since that happened at the start of the year. If we look intraday, we can see a nice upward sloping channel, and prices are basically back to the bottom boundary of that upward channel. That means it is most likely that prices will continue higher this week. However, if that green line is violated, then we have to be cautious, as a pullback on the daily chart is likely. Gold has been, I would say, pessimistic for the last 4 months as it made its way back to the long-term upward trend line that you see on this chart in green. We've had a nice bounce off of that upward trend line, but it looks like maybe we're starting to fizzle out. And when we look at the intraday chart, we see that in a bit more detail. There you can see the downward trend line that has held up for a few months has been broken at the start of the year, but in the last few days we're seeing falling tops forming on gold. And so it's a bit of a tricky chart. I think we're probably going to continue higher in gold, but it's far from certain, and I would be very cautious if gold broke through that green line that I've drawn on the intraday chart here. The next chart is the VXX, which is a representative of the VIX index, which of course is often referred to as the fear index. And you can see here that fear is on the decline. We had a head and shoulders topping pattern, and over the last 6 weeks or so, fear has been in a nice downward trending channel. No signs that that is going to discontinue. In other words, it looks likely that price on the VXX will continue lower. However, I'm a bit concerned when I look at the intraday chart, because we see here a falling wedge. Now, the falling wedge is defined as a pattern where the tops are falling quicker than the bottoms. You can see the green line doesn't have as steep a slope as the red. If the red line is broken to the upside, in other words, if the price of the VXX moves up through that red line, then I'd be a little bit worried, because it would probably coincide with a pullback in stocks, a pullback in many of the assets that we watch, simply because fear is picking up. Now, there is still no sign that that is going to happen. Until we get a break of that red line, we don't need to worry about it, but this is another chart to keep a close eye on in the next short while. Final chart is of oil. You can see that here we have an upward sloping channel, but a very volatile one. That implies that the buyers are in control of oil, but they are very uncertain. And that relates largely to the political events that are going on in the world, particularly with Iran, and the uncertainty of all of those things. Now, it looks likely that oil is going to continue to move higher, but there's going to be a lot of jumping around in price, and so it makes it a difficult thing to trade. Peering into the intraday chart, we can see that upward channel is in place, and we are pulling back to the green line, which is the lower boundary of the channel. That tells me that we're probably going to get a bounce back higher in oil in the next little while, but again, very difficult market to call, and I think it's one for a more savvy trader. So my outlook then is optimistic for US and Canadian stocks. I'm neutral on gold and optimistic on oil, with the recognition that oil is an uncertain market. the markets are continuing to show improved optimism, but they need a catalyst to break them higher. Now, of course, it's earnings season now, and that may bring that catalyst. Of course, it could also define the element that causes prices to pull back. So we've got to watch the markets real closely this week as companies start to announce earnings. We'll have a great week in the market, and trade well.